going to do accounting seminar. So now we pass all the notes which I prepare for seminar. So good morning everyone. So on the first page, write your name and today date and the grade form 1, form 3 and form 5. Use the pens here and write the name, grade and the date. So everyone done? So shall we start the session? Okay. Now go for the page number 2. We got accounting introduction. So today we are going to learn extra more knowledge on accounting. About the accounting exam on GCSE and IGCSE exam. Okay, on the first part, IGCSE accounting is a challenging subject by a structure applied in the critical topic and syllabus that significantly change a student's success. So while you study, so accounts is a subject that can be change the success. So accounts and maths is both. So those who students are good in maths, they can do well on accounts. Those who students are good in accounts, they can do in maths. So the next topic they are saying the main difference in the GCSE is a UK Pacific qualification for the national IGCSE. While IGCSE, the main difference in the GCSE is a UK Pacific qualification for the national question, while IGCSE has an international qualification designed for students more available. So while doing accounting in international private school, they got different IGCSE and GCSE. So the IGCSE meaning International General Certificate of Secondary Education. So that means all over the world. Okay. So if you want to do GCSE, General Certificate of Secondary Education, that can be only done in UK, in Malaysia, in any other Asian Pacific country, there will be 2 or 3 institutes. Okay, the rather this percentage will be high. Okay, the percentage will be high and the cost of the paper will be high. Okay, the IGCSE paper is all over international work. Okay, so that's why we call it I. So I difference international general of education. This one general certification of general certification secondary education. Okay. While we both can compare level, IGCSE provides a broader international version and often more exam season options. While GCSE is more focused on UK content. So GCSE will be focused on more UK. Okay, so while you're doing after Form 5, if you guys are going to do the exam IGCSE, so you can choose whether IGCSE or GCSE accounting. Okay, the code numbers will be different. The IGCSE paper will be a bit easy because it's okay. So GCSE all over the world. Okay. Whereas GCSE is more focused on UK and national requirements. Getting an A plus grade in GCSE with correct attitude definition and students can succeed. So if you want to get A plus, so A plus IGCSE rating will be 95 to 100. So you want A plus, so IGCSE grading will be 95 to 100. Those students who score 95 to 100 will be getting A star. So those students who is getting 90 to 100, they will be getting A and A plus. 5 marks different. So if you're getting 85 to 90, be positive. So if you're getting 80 to 85, B. So A, B, C, E, and F. Okay. Now in the GCSE, the marking score will be 90 to 100 will be A plus. Okay. And 80 to 90 will be 5 marks of that. Okay. For this important exam, students must balance their hard work with self-care. So it depends on the hard work and the self-care, you can get a score A, B, or rather C. Okay. How many papers are in GCSE accounting? So if you are doing IGCSE accounting paper, students studying Cambridge IGCSE accounting take 2 papers in a single series. So in a single series, you will be getting 2 papers. So one paper will be 3 hours. So while you're giving one paper in 3 hours, so the next paper they will give 1 hour or 2 hour break. So after you need to continue the next paper too. Okay, the first paper will be full of MCQs. You guys know what is MCQs, right? Multi choice questions. Just to need to choose A, B, C. So there will be 35 questions. I think Form 5 has been done to the multiple choice questions, right? So in paper 1 we got 35 questions of MCQs, and the paper 2 will be considering full of theories. Like balance sheet, trial balance, income statement, trading account, cash book, balance book, bank reconciliation book, partnership business. So that is okay. So the paper 1 marks will be 35, and the next paper will be the total mark of the paper will be 120 or 160. It depends on the paper. Okay. Now code number of accounting paper IGCSE. If you guys want to do paper, you can search in net 0452. So this is the paper code number of accounting. 0452 is paper 2. Okay. So if you guys want mathematics paper code number 0552. Paper number 2 is 0550/02. So mathematics got two different mathematics, higher tier and anyone? Foundation. They have got higher tier paper and foundation paper. So higher tier paper is more harder. Okay? So if higher tier paper you guys done, it's very easy to get a job for you. Okay? If you done foundation mathematics is very easy, but the percentage level of that is very low. Okay? So when you go for accounting, you get papers two papers. While you go for mathematics, you guys can choose whether I can do a IIT paper or a foundation paper. So both are same 100 marks. Rating will be same. When you're doing English paper, English language, got first language, second language, third language, and fourth language. We are studying second language. So the second language got papers, four papers. One is written. Written means they will give a story. You need to summarize it. You need to give emails and multiple choice question. The paper 2 will be full writing. So you need to explain about the story, what is going on. So each paper will be getting 80 to 60 marks. So 60 multiplied by 4 will be the total marks of the paper. And the third paper will be speaking. Okay, and the fourth paper will be listening. So total you will get 4 papers. So it will be considered English language A, English language B, English language C, and English language D. Okay, the English code number is 752 and 75/22. Okay, May, June, or October, November, the intakes of the exam series. So IGCSE and the GCSE will release the exams on May, June, October, or November. One day, one exam. One exam. Okay? So the 2 months or 3 months, the exam will be grabbed. Okay? This year, got December, the March intake is over. So before you go into register to IGCSE or GCSE exam, before 5 months, you guys need to register. Okay? On the next page, students who pass 7 subjects and to gain an international certificate of education on IC. English board, UK Board of Education will give a certificate for you called ICE. So ICE stands for International Certificate of Education. So in future, you guys doing IGCSE or GCSE exam, so if you get A plus, that means 7 A's. Okay. So if you are doing 6 subjects, you will not get that certificate. Okay. If you guys doing 7 subjects from the board of UK, you will be getting a certificate called ICE, International Certificate of Education. Okay, so that certificate is worth for you to move to countries. So for example, in Malaysia, you did that exam and you get 4 and you get the certificate ICE with 7 A. So for example, if you want to go for next year or within 2 years for UK, London, or any other Europe countries, that certificate will be worth for you. Okay, as that certificate plus you guys need to do IELTS. You guys write English scientific research. Okay, so while you guys choose, okay, either you can choose a commerce stream or a science stream. There are three streams. One is science stream, one is commerce stream, one is art stream. So the best choice depends on the individual strength, interest in the number and business-based physics, science, physical science, and desire long-term career path. Okay, you will be going to. So if you're studying at Cambridge IGCSE International School, you guys done grade 7. When you move to grade 8, okay, they will give a seminar lecture for you guys to choose whether you guys want to go for science stream or commerce stream or art stream. So commerce, science and arts. You guys can choose either one. Okay, after you, for example, at third term of grade 7, you guys score more than the cutoff marks of the school, you guys will be moved to grade 8. If the cutoff marks is not reached, you will be remaining seated in. Okay, after the cutoff marks you pass, you can choose either going for commerce stream, science stream, or art stream. Okay, in commerce stream, main subject is English. Next, maths. Third is ICT. The main three subjects: English, maths, ICT. Next, we go for commerce. Okay, commerce and business studies is same. In 2018, when the syllabus was changing, they were calling commerce. Okay, after 2018 March, when the syllabus is changing, they have turned the commerce name to BS. So BS means business studies. Okay, so every year March the syllabus will be changing. Every year the March, on the month of March, the syllabus will be changing. Okay, so commerce stream they got English, maths, ICT, commerce, BS, economics and accounting. So economics you get, so business studies is full of business management structures, and economics is full of economic growth, how the country is growing and how is developed, what are the needs and what are the wants. Is full of that. Accounting is full of mathematics, formulas, methods, explaining, definition. Okay. On the science stream, same three main subjects: English, Maths, ICT. The three is must. The first three is must. Okay, English, Maths, ICT, physics, chemistry, human bio and bio. So human bio and bio is same. So chemistry and physics and first three subjects is English, Maths and ICT. Okay, so while you're going for art stream, same goes. The first three main subjects: English, Maths, ICT, Geography, History, Music, Fashion Studies, and Art and Culture. Okay, the student who is choosing art stream is very less in all the countries worldwide. Only you got GCSE is most concentrate on art stream. Okay, so most students will be going on under commerce stream and science stream. Okay, so for example, you're choosing commerce. Careers you can choose will be accountant. You can be an accountant. You can see the chart over here. We start. So while you choose the commerce stream, you can be an accountant, business assistant, banker, lawyer, entrepreneur, bank manager. Okay. So if you choose science stream, you guys can be a doctor, engineer, research scientist. Okay. So a commerce stream got some careers, science stream got some careers, art stream got some careers like fashion designing. So if you want to do a business, you can choose science. So the commerce stream. So if you guys want to go under doctors, under health line, you can choose science. So if you're going to do fashion designing or something like that, so you can choose art stream. Okay, the percentage on more will be commerce and science rather than arts. Okay, go to the next page. Okay, on the next page, father of accounting. So that means who invented the accounting? When the accounting was came, by whom was it came? It's came. There is an Italian guy called Luca Pacioli. So Luca Pacioli. Pacioli is the man from Italian who is gone through mathematics and he has invented a called accounting a subject. Okay, so Luca Pacioli often refers to as a father of accounting was an Italian mathematician. Okay, so he was an Italian mathematics guy. Okay, so who invented the balance sheet? So in accounting, balance sheet is very important. So while you're doing a business or while you're working, balance sheet is very important. So when the balance sheet debit side and credit, I will explain you later what is debit and credit. So in the balance sheet, when the asset and the liability is equal, then the business accounts is correct. So if the asset and liability is not equal, the business is incorrect. That means it's going under loss or your accountant maybe make a error. Okay, who invented the balance sheet? Luca Pacioli, often called the father of the accounting, introduced concept of the double entry bookkeeping in 1490. On 1494, the accounting has been introduced to the Board of Education. Okay, this laid the groundwork for what would become the modern balance sheet. Pacioli's systems record every transaction in account, one debit and one credit. Okay, what are the functions of accounting? The main functions include tracking income and expenses. So what do you mean by incomes? So incomes means, for example, I'm a businessman, so I'm receiving money from my neighbor, from a different person, from my friend, so that is my incomes. Okay, so when I receive money from another person to myself, that is called incomes. Okay, and expenses, day-to-day expenses. For example, I go to a restaurant and buy some foods, so that is my expenses. So today I buy food, tomorrow I buy drink. So the money I spend from my pocket, that is called my expenses. Okay, so in accounting, income and expenses is very important. Income means receiving money, expenses means money out. So money in and money out. Okay, the main function included tracking income and expenses, managing accounts receivable and payable. So receivable is same similar to incomes. What is receivable and what is payable? So receivable meaning coming in, payable meaning money out. Okay, fine. Payroll processing, financial recording, budgeting, and conducting financial analysis to judge the performance improvement. So if you are doing a business or you're a daily person, you need a budgeting. So the less the cost. Okay. Next one. What are the golden rules of accounting? There are three golden rules. Debit what comes in, credit what goes out. So if money comes in, that is debit. If money goes out, we call it credit. Okay. Credit the giver. Okay, and debit the receiver. We call it the receiver will be the debit, the creditor will be giver. Okay, so debit will be appear on the right side of the account, the credit will be appear on left side of the account. Okay, the third point, credit all incomes and debit all expenses. So incomes are credited, expenses are debited. Okay, is an accounting a happy career? Okay, how enjoyable is an accounting work environment? As the whole their environment by their working environment 3.1 out of 5. So if you think accounting is an happy career, the rating right now is 3.1 over to 5. Most of them tend to enjoy or at least not be active bothered by other working environment. So rather than the other working environment, they are saying the accounting is more flexible. Okay. What are the three major types of accounting? Okay, three main types of accounting, including financial accounting, accounting, and cost accounting, consider different in their working principles. So, in accounting, we got different principles. So, principles meaning rules of accounting. Accounting got rules. What comes in, there is a record. What goes out, what is record. Accounting is full of business structures. Okay. Now each accounting types have different goals. However, all of them are equal important to business organization. So under business organization, for every business organization, we need an account. Okay. What type of accounts has the highest salary? So in accountant, after you study accounting and you get a good score, you can be an high paying accounting jobs are revenue accounting manager. So he is the person will be getting a high revenue in that field. Okay. So the finance manager, next one will be the assistant and the chief accountant, and the project manager will be under them. The head of the accounting will be revenue accounting manager. Okay. The next one, why do we study accounting as a student? Okay. Accounting is a key tool business professionals use to understand and communicate business. When you learn accounting, you unlock the ability to understand business, produce and act usefully information and lead organization to. So to do the financial success, we guys will learn accounting as a student. Okay, which country has the best accountant? The United Kingdom remains the best country for categorized accountant and related professionals in the world. The British finance sector is rivaling with plenty of major accounting firms setting with headquarters in the country. So the United Kingdom has the best accountant in the world right now. Okay, the next one, which country has, sorry, what is budgeting? Okay, budget was created a plan to spend your money. So budgeting is a plan that you guys can plan to spend your money. So for example, you guys can think, okay, on January next month will be September. So you guys can have a budget planning. Okay, in September I will be spent only RM 300. So you need to differentiate it. Okay, 100 for my entertainment, 100 for my other expenses, 100 for my education. So you need to have your own budgeting in your personal life. Okay. Process of spending money. Spending plan for a budget. Creating a spending plan allows you to determine and whether you will have enough money to do things you need to do or would you like to do. So you need a specific budget lining for spend your money. Okay. Next one, what is the basic salary of an accountant in Malaysia? So in Malaysia, what is the basic salary of an accountant will be starting on. Okay, the average basic salary of an accountant in Malaysia is roughly RM 3,950 to 6,450. So that is the basic amount. Okay, and with entry level position like account like professionally starting around 1,700 to 2,500. That means like assistant. First, after you finish your study, counter directly you cannot get like 4,000, 5,000 salary. They will give you roughly 1,700 to 2,500. That is the basic amount. Okay. While more experienced role such as like senior accountant can come on RM 10,000 to maxis 15,000 RM. Okay, the senior accountant currently wage rate is 10,000 to 15,000 or more. Actually, salaries were significant based on the specific group: account executive, financial accountant, account executive, experience, location. So the salary will be depends on your experience and the studies that you will make. Okay, the year of experience, location, Patalinja and KL highly paying cities. So highly paying cities is on PA and KL. Okay. And the company size and the industry, it depends on the company. If the company is high potential, they will give you more. Okay. Okay. Now we go for the accounting. Chapter introduction of accounting. Okay, and business structure. So the first chapter on accounting Cambridge International Syllabus is the business structure. So how many business structures are in accounting? They have got three business structures. One is sole trader, another one is partnership, and next one we call it private limited company. So the first one is sole trader, partnership business, and private limited company. Okay, the first one, the sole trader. Or sole trader is the simplest business structure where one person owns and runs the business. Okay, the business categories got three categories. One is sole trader, one is partnership, and one is private limited company. If a single person is doing a business, we call him sole trader business. Okay, those who done with one person is the owner of the business, we call it sole trader business. Acting as both as the owners and the business entity with no legal supervision between the two. As a sole trader, you have to complete also unlimited personal liabilities or all business debts and losses. So if any losses came, if any profits, it will be handled by that one person. So sole trader meaning one person who does the business, we call it sole trader. Okay. Next point, the setting up in a straightforward with a lower cost and further legal formalities than other structures by rising funds can be difficulty. You will use your own tax files number. So each and every business will be getting tax file numbers. Okay, the numbers will be 8 digit or 10 digit or 12 digit numbers. It's given by the government. Okay, to report business incomes and pay personal income taxes and national insurance contribution. Okay, so what if a business is done by one person? We call it sole trader. Okay, now we are going to check what are the advantages and the disadvantages if one person does a business. So advantages of a sole trader: easy setup and lower cost. Okay, so for example, I am doing a business, I just go and open my, so the low cost, with the low cost I will open. Okay, and the product in my inside my business will be less. So if only one person is doing a business, he will getting a bit less income and the expenses also will be more. Okay, simple accounting records. So if only I am doing a business, for example, I am doing a restaurant shop, okay, by my single own shares. Okay, there's no shares, only I'm doing a business. The second point they are saying simply accounting records. So I do not want to record in balance sheet, income statement, profit and loss account, partnership account. I don't need to record. I just need to record what is coming in, what is going out, how much is my profit. Okay, a sole trader will be prepared only what is coming in, what is going out, and what is my profit or loss. Okay, and the third point they are saying full control over finance. So on the finance system, it will be full control. Okay, privacy for financial information. So financial information is privacy on the sole trader. If one person is doing a business, okay, only I'm doing a business, he knows what is my profit and loss. The profit and loss will be belongs only for me, and I will only know how much is my profit and how much is my loss. Okay, next one they are saying flexible use of funds. So the funds I can put today and tomorrow I don't need to put because it's my business. Okay, so it's my business, I can put money today, tomorrow I don't want to put money, I'm going to just troubleshoot it. Okay, and what are the other advantages of sole trader? So I'm doing business, I can take my own holidays and working time and working days will be depends on me. So I can choose my own working days. For example, I'm a businessman, I can take off tomorrow, I can directly take off. So if I'm working under company, there are different procedure. Okay. So there are the advantages of a sole trader. If one person does business, there are the advantages. And the disadvantage of a sole trader. For example, unlimited liabilities. So the meaning of liabilities is debts. he will say, give me an asset and he will be not paying for me. So that is called liabilities, debts. So they will say, today I will pay or tomorrow I will pay. The unpayment payment will be called liabilities. Okay. Limited access of finance. So finance will be limited access. Next one, cash flow management challenges. So the cash flow is very hard to manage with a limited cash. Okay. The next one, hard to sell the business. Okay. That means if only one person is doing a business, it's very hard for him to carry it forward. Okay. So, for example, he can be working more than 12 hours, 14 hours. There is no workers, and there's only one person. Okay. Okay. The next topic, partnership business. Okay, a partnership business is a legal agreement between two or more individuals or utilities to operate business together and share profit and losses. So partnership business meaning two or more than two persons who joins and do the business, we call it partnership business. For example, he and her joins and do a business, that is called partnership business. And the profit and loss will be shared between them. So for example, from he spent RM 40,000, he spent RM 50,000, and she spent RM 60,000. The profit will be shared equal to them. How much percentage has been paid in person. Okay. The most common and easiest form where all partners are involved in management and share liabilities and profit equally. So if there are more liabilities, they will be shared equally. Okay, for example, 10,000 liabilities, 3% will be shared with it. So for example, is 2,000 ringgit is the liability, 3% will share the liability. For example, if 15,000 is the profit, so each person will be shared 5,000 ringgit, 5,000 ringgit, 5,000 ringgit is their profits. Okay. Next one, partners combines their capital, expenditure and skills which can lead to a better decision making and a strong business. So if only one person is doing a business, very hard to him to. So for in the partnership business is very easy because more than two person is doing a business. So more than two person are doing a business, it's very hard, it's very easy to invest more capital and more experience and more skilled labors will be coming in. Okay, so advantages of a partnership business: easy access of capital. So capital means inventories. So for example, in the school, what are the capitals? The chairs, like these fixtures, fittings, banners, boards are the capitals. Capitals and assets are same. Okay. Easy access to capital. Okay, the capital will be easy them to put into the business. Share responsibilities. So if any losses or profit included in the business, all will be shared. If any loss, all will be shared between the partnership, or if any losses or profits will be shared between the partners. Okay, more partners and more capital. In partnership business, we're getting more partners and capital. Okay, but the partnership, shared profit. Okay, so if a sole trader is doing a business, if one day RM 5,000 is the profit, the 5,000 belongs to the sole trader. You don't need to give to another person. If one person is doing a business, if you're getting 5,000 profit, it belongs to him. Okay, if these three persons are doing a business and they got only 5,000 profit, they will be sharing that 5,000. Each person will be not getting 5,000, 5,000, 5,000. So the business profit is 5,000 shared by 3%. So that means 5,000 will be divided by will be goes to each person. Okay. Next one, tax issues. So when you're doing a partnership business, the government may ask you more tax because the shareholders on the business is high. So if the shareholders in the business is high, you need to pay more tax to the government. Okay, higher risk of late payments or bad debts. So, for example, while you're doing a partnership business, for example, you're doing a partnership private partnership restaurant. Okay, it's very hard for labors under them. So okay, one person will say I am going to pay him only 1,000 ringgit. Okay, one person will be say I will pay only 2,000 ringgit. So that the hard decision making, the decision will be hard for them to make it. Okay, the next point, you have to share the profit. The profits are shared. So it's a big disadvantage. If a sole trader is doing a business and if you get the profit, it belongs to me. Partnership business, if you are partners are doing business and getting a profit, that profit will be shared equal to them. Okay, next one, private limited company. Private limited companies, often abbreviated all T, LTD or SDN and PhD in some region, is the type of business structures where ownership is reserved to the limited number of shareholders, typically with a maximum limit of 50. So if you're doing a partnership, sorry, private limited company, the maximum people and the shareholders will be only 50. Okay, the partnership business, the range will be 2 to 20. 2 to 20 will be the range of private limited company. You can go maximum is 50. In Malaysia, it's 50. In different countries, the partnership, sorry, the private limited companies give their minimum number of people. Okay, so for example, in UK, the minimum is 100. In, for example, in Sri Lanka, the maximum is 75. So each country got their maximum number of private limited workers they can work in. Okay, a private limited company, sorry, the company is recognized as a person in the can be own property, the entire property, choosing things and its own name. So within the under a name called SDNBHT or LTD or so this name you should get from the government. For example, I need to start a business. So for example, Samir LTD. So this LTD name and SC and PhD we need to register from the government of the of. So what are the advantages of a private limited company? Limited liabilities. So the liabilities will be less. So because the private limited companies will be very big companies, so the liabilities will be less from their business. For example, private limited companies will be manufacturing company, chocolate factories, big companies. Okay, limited capitals. That means the depths of the business will be low. The next one, can raise money by selling shares. So if 1 to 50% is doing a business, so each person got their shares. Okay, for example, the 50th person will be getting shares 4 over 50. The first person will be getting a shares 2 over 50. On the middle, 25th person will be getting a shares of 4.5 percentage on 50. So on the 50 people, different people get different shares. Okay? Okay, what are the advantages if you have a company? Can raise money by sharing the professional images. So the image of business will be professional, look more professional. Okay, better access to loan. So getting a bank loan or personal loan is very easy. You, it's very easy when you're working under private limited company or you run some private limited company. Okay, those who run the private limited company, very easy to get a bank loan. Okay, those who run a sole trader business, it's very hard them to get a loan. So okay, loan we need to, the banker will check how much you receive in your account for 1 year or 1 month or 2 years, how much is the receivable. So receivable amounts, it depends on the receivable amount, they will get you a loan. If the receivable amount is less, the amount is, the loan amount will be less. Okay, now go for the disadvantages of private limited company. More rules and paperwork. So the disadvantages of a private limited company will be more rules and more paperwork. So if you are running a sole trader business, just you need to write what is my income, what is my expenses, what is my profit, how much is my loss, how much is my profit, and how much is my expenses, and how much is my income. Okay, if you are working under partnership business, a bit more than the sole trader. So you need to prepare
how much is my profit for the month, how much is my loss for the month, or how much is my income for the month, and how much my expense for the month. Okay. The next one, disadvantages of a private limited company: more rules and paperwork. Okay, next one, less privacy. The privacy of the business will be less because a sole trader business, you guys don't need to put, for example, I'm running a restaurant business. If I'm a sole trader business, I will not more focus on the network. So if I more focus on the network, my privacy is gone. Okay, they will know how many workers are there, what is my price. So for example, KFC, McDonald's, Pizza Hut, Domino's, they will list their price on the network. For example, in Grab, they will list out how much is my pizza and how much is my chicken burger and how much is my burger and how much is my coffee or something like that. Price amount is not privacy. So if you are doing a sole trader business, the amount of the selling product will be privacy. On the partnership business also, the selling price will be a disadvantage. Okay. Now the disadvantage, next third one, profits are shared. So profits are shared is a big disadvantage. Okay. For example, if you get 50 private 50 shareholders, so the amount of the profit will be shared to the 50 shareholders. How much they invest, how much is my profit. Fourth topic, cannot sell shares to the public. So if you got shares in the company, for example, the first person is getting 2 percentage of shares, around 50 shares. So totalized shares will be 50. From that 50 shares, he is getting only 2 shares. So these 2 shares he cannot sell for a public person. He can sell under this 50%. Okay. For example, this first person have 2 shares, he want to sell for the 50th person. So these 2 will be going here. So 6 over 50 percentage. Okay. And go to the next page, page number 9. Okay. Bookkeeping. In accounting, bookkeeping is the process of recording a company's financial transactions such as like sales, receipts and payments into organized accounts. So bookkeeping means what are the expenses, what is my sales, what is my purchase, and the receipts of it and the payment, what I recorded is called bookkeeping. Okay, bookkeeping meaning, for example, uh, there's a trader called Samir. Okay, Samir today next this month first first of August. Okay, 1st of August, he has been purchased RM50 for food. Okay, the next day he has purchased 20 for food. And next day he has been purchased 30 for drink. Okay, like that. For food, drink, what are the expenses going from the person? What is recording is called bookkeeping. Okay, the bookkeeper maintains this record on daily basis, ensuring that bookkeepers maintain these records on daily basis, all financial information available up to date and accessibility. So that means day-to-day expenses and monthly expenses. If the recorder is recorded, we call it bookkeeping. So day by day expenses, if recorded, we call it bookkeeper. Okay. The next one, the first main 3 topics in accounting: assets, liabilities, and capital. Okay, these are the main 3 topics in accounting: assets, liabilities, and capital. So, asset in accounting, an asset is a by business or individual that has a potential economic value and it's expected to produce further economic benefit. Assets are recorded on a company's balance sheet and include more terrible items like buildings, equipment, and equipment items such as and good billing. They represent values that can be used to generate income, be sold for cash, or provide an advantage in the market. Okay, assets meaning inventories. So inventories of the business. So for example, asset of this business is premises. Premises is an asset. Motor vehicles. Okay, premises, buildings, shops, and buildings are assets. Okay, for example, assets are products. Okay, that are value. For example, gold is a big asset. Building is an asset. Premises is an asset. Okay, next one, liabilities. In accounting, a liability is a debt. So liability we call is debts. Okay, responsibility that a company owns to an external party, such as like tenders. So I am I am a businessman and I am a loan. I am a debt to him. He is my supplier. So that one we call it liability. Okay, that I need to pay to him. Okay, these financial information arrives at past transaction and will require future payments of assets or services to sell. Example include bank loans, account payable, money owed to a supplier, salary owed to owner, salary owed to employees, and taxes. So what are the salaries owed to the employees is a liabilities. So liability means the owner need to pay to the workers. Okay, capital. Next one, in accounting, capital refers to an asset, money, or other resources used to generate income, fund operation, or investment in new project. Okay, it can also replace the owner shares in the business, also known as equity. So equity and capital got same meaning. Next one, capital includes financial assets and physical assets like machinery. So if machinery is an asset. Okay, as well as property. Okay, accounting got some equations. Okay, asset should be equals to liability plus capital. Okay, so asset is equals to liability plus capitals. Okay, ladies and gentlemen, we'll be going for a short break. Okay, we'll be going for a short break, and then we'll continue back after break. Okay, so accounting equation. Asset is equals to liability plus capital. So the primary benefits are improved accuracy, the prevention of errors, and the provision of complete financial overview of the business. So what it means they will given a single type of transaction. So we need to record in double two accounts. One in debit side and one in credit side. That means there will be one transaction you need to record in one debit side and one on credit side in different accounts. Okay. Now the first point, two side entries. Each transaction has two sides. So each transaction will be having. So this is an account. Each side will be, one is left hand side and right hand side. So the left hand side will be debit. And the next side we call it credit. Okay, debit and credit. So debit will be upon the left hand side, credit will be upon the right hand side. Okay, equal and positive opposites. The total amount debited must always equal to the total amount credited each transaction. In the transaction, if you got only one amount, the amounts you need to enter on the debit side and the credit side should be. Okay, for example, a transaction of $500, so the $500 will be debited and the same amount will be credited. Okay, in different accounts. So now debit and credit. Debits are recorded on the left side of the general ledger account. So the debit will be recorded on the left hand side of the ledger account. Okay, and credits are on the right side. So on the right side will be the credits. Okay, the meaning of debit or credit depends on the type of account. So it depends on the type of the account of the transaction we need to place credit. Okay, accounting equation. The principle is that assets must always equals to liabilities plus equity. So assets will be equals to liabilities plus equity is the equation. So every transaction keeps this equation in balance. So each and every transaction will be keeping the balance remains. Okay, next one, general ledger. Transactions are recorded in general ledger, which contains all individual. Now drawings. Represent drawings means in accounting drawings means represent any value taken from a business by the owner taking money from his business for his personal use, we call it drawings. Okay, for example, I'm a businessman. From the business drawer or from the business bank account, I'm going to take $50 for personal use, so that one we call it drawings. When a businessman is taking money from his drawer or business account for his personal use, we call it drawings. Okay, so the double entry system will be divided into two. One is debit and one is credit. So debit side will be receiving amounts, credit side will be giving. So debit side cash in, credit side. Balancing ledger accounts. At the end of each month, it is usual to balance any account of the assets and liabilities which contain more than one entry. The balance is the difference between the two sides of the account and represent the amount which is in left in that account. On a calculator or separate sheet of paper, add up each side of the accounts and find the difference between the two sides. Okay, to balance the account, we need to find the difference between each side. So each side is different. That means on the left hand side and right hand side, we need to check how much is the difference. Okay, on the second point, enter this difference on the next available line on which the side which is the smallest in number money. Enter the date as usual, the last day a CD in the foliar column. So CD full meaning will be carried down. So if you guys want to write, just copy down. CD full meaning carried. This is for carriage down, and we take where the double entry for this item will be made. So the third one, they are saying total each side of account. This is done by drawing total lines and inserting the figure between these lines. It is usual to show a single line above the total and either a single or double line below the total. The total of the amount must be on the same level and must be on the same figure. Okay, the next point, the balance. To balance a ledger account, some of the debit sides find the that amount on the smaller side to make the total equal. The debit is CD, so CD meaning carried down, carried down, and the date as the end of the period. The same amount is brought down. So brought down meaning so the same amount will be taken to a next month. We'll explain about this. Okay, for the start of the next period, expression account new balance. Okay, now for example, okay, this is the format how you guys prepare a ledger account. 1, 2, 3, 4, 5, 6. 6 columns. So the first column will be named as date. Next one will be details. Next one, dollar. Again, date, details. So this is the format how you prepare a ledger account. So there will be 6 columns. First column will be detail and next one will be total. So total means the amount depends on the question. If they give a currency of dollar, you need to mention dollar currency. If they give you question on RM, so you need to mention RM. Next one has date, details, again total. So total is amount. Okay. These first three will be named debit sides. Okay. On the next three will be named as credit sides. So the first three columns will be debit, and the 4, 5, 6 will be credit sides. now we are going to record this account. So this is the format of ledger account. Date details dollar, date details dollar. So I prepare. So for each and every single transaction, we need to prepare two ledger accounts. So okay. So this is one transaction. So this one transaction, for we need to prepare like this two accounts. Okay. The transaction they are saying 2012 January 1st. So that means 1st of January 2012. Ajay bought a motor vehicle. So Ajay is a person. So Ajay bought a motor vehicle by check costing $50. Okay, so Ajay is a person. He buy a motor vehicle by check. Okay, he's going to buy a motor vehicle by check costing $50,000. So what does Ajay get back? Ajay will be getting what? So Ajay is a person who is buying a motor vehicle by costing $50 by check. So what does Ajay get? Ajay will be getting motor vehicle. Okay, so then we need to prepare a motor vehicle account. Okay, we need to prepare a motor vehicle account, and one more account will be, so you're going to purchase by check, right? So if check, it occurs bank. Now, on 1st January 2012, Ajay bought a motor vehicle by check costing $50,000. So what's coming into the business? Debit will be in, credit will be out. So Ajay receiving is motor vehicle, right? So he will be receiving motor vehicle. Okay? And out money by check. So we need to record 50,000 over there. 50,000 over there. Okay, that means 50,000 bank account 50,000. Okay, the details called and date. Those who want to copy down, faster copy down. Okay, we go for the next subtopic. What is the meaning of ledger balance? The ledger balance, also called the current balance. So current balance and ledger balance are similar meaning. The money in a checking account every morning, the ledger balance should remain the same of the duration of the day. So for example, yesterday, 29th of August. So on 29th of August, when I finish my work and go home, I see my float money was $1,000. So when I come back to the morning, there's no transaction has been made. Okay, so the next day morning, the amount will be same. And what amount I'm closing on the next before day, the next day the same amount remains in the floats. The next one, what is the financial ledger balance? What is the ledger balance? A ledger balance represents the total funds in the bank account at the end of each business day. Includes all posted transactions such as like deposit, withdraw, and payments. So under the bank account, there will be deposit, withdraw, and payments. So deposit, money in, money receivable, withdraw, money out. Okay, the bank has all the records, how much has been taken and how much has been withdrawn. The current balance, we call it at the current end of the day or end of the month transaction after, what is the remaining balance is called the current balance. Okay, the next one, double entry records for sales, purchase and returns. Go for the next page, page number 12. So the page number 12, double entry records, sales, purchase and returns. So the first one, sales in ledger account. Sales refers to an activity and revenue selling goods and services, the process of selling or the number of items sold. So sales meaning, so for example, I am an owner and he is my customer. So when a customer buy goods from a owner, so that is sales for the business. Okay, so money that's come in, that is income from the business, the goods is sold, we call it sales. Okay, it can also refers to a specific period where items are sold to reduce price or department responsible for selling products within a company. So in the company, when the products are sold, we sold it sales. At the end of the day or end of the, we can see the sales by end of the day or end of the month or end of the week or end of the year. Okay, we can calculate the sales day by day or week by week or month by month or year by year. Okay, the next one, purchase. Purchase in ledger account. A purchase is a process of a business by goods, services, or assets by exchanging money for them, which can be done with cash or on credit. So purchase. So I'm running a business. For example, I'm running a foods business. Okay, the foods come from a supplier, right? Okay, so I need to pay money to him to get fruits. So the supplier and the deal with the owner, we call it purchase. So I am purchasing with the supplier. Okay. These purchases are recorded to track expenses, update assets values like inventories, and fulfill operational needs with a specific accounting treatment. Whatever depends on the items purchased and whether for its resale, production, or other general business use. Okay, the purchase is the item that the owner is buying from someone. So the owner sells, that is called sales. Okay. Now the sales returns ledger account. When the customer returns the purchased item, a sales return is recorded. So on the account, if the owner sells, it sells. Okay, now day before yesterday, I sent to my customer one product. Okay, so I sell the 500 markers to this customer. Okay, on the next day, the customer returned back to me 2 pieces of marker. So the customer returned back to me 2 pieces of marker. So that one we call it sales return. Okay, that means that can be a damaged goods, that can be a damaged goods, so that the customer has been returned. A sales return is a physical return by a customer due to reasons like damages, defects, or incorrect items, which reduce the seller's revenue. So, if the customer is returning back, the revenue will be less to the business. Okay, it is recorded in a sales return and allowed account, which subtract from the gross sales on the income statement to arrive at net sale. So from the net sale, they will be calculating. So sales minus the sales return, we're getting the net sale. Okay, for example, my sale is 10,000 RM. So from that 10,000 RM, I got sales return RM 2,000. From that 10,000 minus 2,000 will be 8,000. So 8,000 is my net sale. Okay. Next point, when a return occurs, the business records a journal debiting the sales return and allows account to adjust inventory and cost of goods sold. It debits inventory and credits the cost of sold goods. So sales return meaning when a customer is returning back to owner, we call it sales return. Okay. Now go for the purchase return in ledger account. A purchase return or return outwards when a buyer returns goods to the supplier vis-a-vis the original purchase transaction. Okay. Okay, when the owner buys from the supplier, we call it purchase. Okay, when the owner returns back to the customer, okay, so sales meaning when an owner sells to the customer, we call it sales. Sales return meaning customer when return to the owner, we call it sales return. Purchase meaning the item which is purchased from the supplier by the owner, we call it purchase. Purchase return meaning the owner return back the supplier. Okay. Next one, carried inwards. Okay, next one, carriage inwards is the cost of bringing the goods to the business. So carriage inwards meaning is the cost of bringing the goods to the business. Okay, the next point they are saying carriage inwards, also known as transportation in the cost of transporting goods or raw materials that to bring them from the supplier's location to our own premises. So, for example, from the supplier, we taking goods, right? So we are taking goods by our own transporting money. So that one we call it carriage inwards. To our business, we need some equipment, so we buy from outside and we are spending for the transportation cost. So that one we call it carriage inwards. Okay, so for example, I'm running a restaurant. So from the market, so I need to buy vegetables, fruits, chicken, meats, and raw materials, something. So day to day, I will pay for the transportation cost is known as carriage inwards. Okay. Next one, carriage outwards. Carriage outwards is the cost of delivering the goods to the customer. So carriage outwards meaning is the cost of delivering the goods to the customers. Okay, carriage outwards refers to the expenses and a seller occurs for shipping finished goods to customer, include handling and delivery fees. So the delivery fees we are paying to known as carriage outwards. For example, you guys order from McD or KFC any foods, so the money you are paying to the carriage outwards. Okay, carriage inwards, our own material we taking from outside, paying for the transportation cost is carriage inwards. The money we are paying to the delivery boy, we call it carriage outwards. Okay. Next one, bank overdraft. So bank overdraft meaning bank overdraft allows you to spend more money than you have in your current account. So the bank overdraft will be occurring in current account. Okay, bank will be giving you one is current account, one will be saving account. So current account, debit credit card, and saving account card. Okay, now we are talking about current account. Okay, allows you to spend or withdraw more money than you have in your current account. Up to limit resulting in a negative balance. Okay, if your bank balance got a negative amount, we call it bank overdraft. It functions as a short-term loan from the bank to cover unexpected expenses or temporary cash flows, short flows. But it occurs interest charges and potential fees. So bank overdraft meaning okay, there is a trade person called Adam. As a, we can take an example of Adam account. Okay, Adam has a current account in a bank. Okay, on the bank, current account, he got RM 10,000. So current account is RM 10,000. Okay. So today is going for we think about day before yesterday. So day before yesterday his current account balance was 10,000 RM. Okay. Now he has been purchased a motor vehicle cost RM 2,000. So now how much is his remaining balance? So from the 10,000, his balance was in the bank is 10,000 RM. So he has been purchased RM 2,000 for motor vehicle. So now how much will his balance? 8,000, right? So RM 8,000 is current balance right now. On the next transaction, is going for more and he's going to purchase some goods. Okay, for that goods, it costs 4,000 RM. So now how much is his remaining balance? 4,000 now his remaining balance. So from the 3,000, he purchased 2,000 from the 8,000, he has been purchased for 4,000 some goods. Now his remaining balance is 4,000. So from this 4,000, he again buys some goods. Okay, for 4,000. He has been already purchased 4,500. In saving account you cannot. In current account you can. Okay, in bank saving account and current account. The remaining, for example, in saving account, so from that item for 4,000 saving account you cannot. If you take a current account, okay, you have a remaining balance of 4,000 and you're going to purchase 4,500. Okay, balance is 4,000, but you want to purchase for 4,500. How much extra money do you need? How much? 500. So you have a 4,000 balance, but you want to purchase for 4,500, but you need extra 500. This 500 amount bank will be giving for you. Bank will be giving for you. Okay, this 500 you need to pay to bank within 3 months period or 1 month period or 6 months period. Maximum is 6 months period. Okay, within 6 months you need to pay back to bank this RM 500. Okay, with the percentage of interest. The bank will be not giving you free. The bank will be giving you money with an interest. So now the banker will say, I've already given you RM 500 extra. You need to pay within 3 months with 5% interest per month. So if per month 5% interest, 3 months how many percentage? 15% interest. So 500 times with 15% interest. So that amount you need to pay to the bank. Okay? Understood bank graph? Okay, go for the next topic. Shareholders. Okay, shareholders have rights to a shareholder has rights to the version of company's profit and may participate in corporate decision making such as like voting on board members and by their liabilities for the company's debts is limited. Okay, shareholders in private limited companies only the shareholders will be okay, shareholders, and in partnership business, in certain partnership business there will be some shareholders. So shareholders meaning owners lah. So for example, now group together, you're going to do a business. So his shares, her share will be different. His shares will be different. His shares is different. His shares is different. The amount they are investing in the business over to the capital is their profit. Okay. Go for the next topic. Difference between short-term loan and long-term loan. Okay. Short-term loans are called such because of how quickly the loan need to be paid off. In most cases, it must be paid off within 6 months to an year, at most to 18 months. Okay, as uh, any longer term that can be considered medium term. So difference between a short-term loan and a long-term loan. Okay, the bank will be divided loans into two types. One is short-term loan and one is long-term loan. A short-term loan, the bank will be giving you that you need to pay within 6 months or 1 year. Okay, 1 year means 12 months. 6 months to 12 months you need to pay the short-term loan with a percentage of interest. Okay, the long-term loan meaning the banker will giving you a loan that you need to pay in 2 or 3 years. Okay, that means 24 months. They will giving you 24 months or 36 months, a bigger amount that you need to settle with an interest to the bank. Okay, that is the meaning of short-term loan and a long-term loan. So if you are choosing a short-term loan, there is a limit amount that how much you get. Depends on the bank. Okay, the long-term loan meaning same meaning, but the months they will give you increase. So you can pay within 2 years or 3 years or 4 years. Okay, with a percentage of high interest. Okay. Okay, for the next one, assets. Okay, now assets. Assets can be divided into two types. One is non-current asset and one is current assets. Okay, one is non-current asset, one is current assets. So current assets are short-term resource expected to be converted to cash or used up within 1 year or one operating cycle, such as like cash, inventory, and account receivable. Current assets, there are some cash, inventories, and account receivable. So account receivable and trade receivables are same meaning. Okay. Now non-current assets, also known as long-term assets. So non-current assets items are long-term usable assets. Okay, a company expected to hold for more than a year, like property, plants, and equipment. For example, machinery. Machinery is an asset, right? Machinery is an asset, right? Okay, machinery usage within, it will be less than 1 year or more than 1 year? It will be more than 1 year, right? So, assets. So, non-current asset item will be used for more than 1 year. Current asset for less than 1 year. Okay? So, for example, cash. So, now I am having 100 ringgit. So, this 100 ringgit, can I keep the 100 ringgit same 100 ringgit for more than 12 months? No, right? I will be using or I will be spending or I will be inverse. So, cash is current account. Okay? For example, premises, this premises. So, is it a non-current asset or current asset? So, it can be used for 12 months or more than 12 months. It can be used for more than 12 months, right? So, premises is premises, motor vehicles, land and building, shops, machineries are non-current assets. So current assets are the items that can be usable for less than 1 year. Non-current items are the assets which can be used for more than 1 year. Okay. Now the main difference is their liquidity and the time frame over which they are expected to utilize or sold. So asset can be sold and utilized. So if we are using more than 12 months, we call it non-current asset. If we are using less than 12 months, we call it current asset. Okay. Now examples of non-current assets. So they are given 4 examples. Motor vehicles. So of course motor vehicle we can be using more than 12 months. So it's a non-current asset. Next one they are giving premises. So premises mean buildings. Buildings will be called as premises. Okay. So premises of course we can use more than 12 months. Okay. Next one machineries. So machineries items that can be used for more than 12 months. So land and building. So land and building of course you can use for more than 12 months. Example of current assets. So same, they are given four examples of current assets. So first one is cash. So cash is the number one of current asset. Next one, bank. The reason the bank in the current asset, the bank amount. So for example, in my bank, I got RM 5,000. So that is a current asset. Okay. So cash in hand. So cash in hand, cash is safe. Okay. Now trade receivable. Trade receivable means money that need to receive for us. Okay. So on the next page, page number 15. So on page number 15, liabilities, debts. So liabilities also can be divided by two parts. One is non-current liability and one is current liability. Okay, so asset also can be divided by two. One is non-current asset, one is current asset. The next one is liability. Liabilities also can be divided by two. Non-current liability. So current liabilities are a company's short-term financial obligations that are due within 1 year or less. While non-current or long-term liabilities are those due in more than 1 year. So the difference between a current liability and a non-current liability is so non-current liabilities, the amount that you need to pay another person within over 12 months. Okay, that means you need to pay the within 12 months. Non-current liability is the liability that you need to pay 12 months or more than 12 months. Okay, so you can just remain non-current liability is plus 12, current liability is minus 12. Okay, as we learned before, assets can be divided by two, right? One is non-current asset and one is current asset. So now we are going to learn about liabilities. Liabilities also can be divided by two, non-current liability and current liability. Okay, so the non-current assets can be usable for more than 12 months. So non-current asset items can be usable for more than 12 months. Current assets can be used for less than 12 months. So same goes for and current liabilities. So non-current liabilities, a debt that you need to settle at least 12 months or more than 12 months. So same goes to current liabilities, debts you need to pay within 12 months, 1 year, 1 year. So part one. So non-current asset item can be usable for 12 months or at least 12 months. So current assets will be usable for less than 12 months. So same goes to liabilities. Non-current liabilities can be used the debt to settle at least 12 or more than 12 months. Current liabilities meaning the amount that you need to settle within 12 months of period time. Okay. Now the second point they are saying the primary difference is the time frame for the repayment. The repayment you need to place the time frames between current liabilities and non-current liabilities. Both are reported on the company's balance financial. Okay, as you mentioned above, liabilities are divided into two different categories. So liabilities will be divided by two categories. One is current liabilities and one is non-current liabilities. So current liabilities have a short term of 1 year or 1 year or less. Okay. Non-current liabilities represent long-term assets that have a maturity of more than 1 year. So that means plus 12 months minus 12 months that you need to pay off. Okay. So for example of a non okay, long-term loan and lease. Okay, long-term loan and lease will be occur on non-current liabilities. As we learned before, a long-term loan, the banker will giving for you with a high payment of interest that you need to pay at least 12 months, or you can drag it more than 12 months. For example, 12 months, 24 months, 36 months, or 5 years, 6 years, you can drag it. Okay. Example of current liabilities. Account payable. Account payable that the businessman is debt. For example, businessman is debt to a shareholder. Okay. And next one, short-term loan. So short-term loan is current liability. Long-term loan is non-current. Okay, now we again go reverse back from page number 2 to 16 as master. Okay, either done before, the difference between IGC and GCSE accounting past papers and the paper intakes they are will be happen and when will be happen and how many papers they are going to be seated. And on the next page we was learning about the career path for commerce streams and the science stream and the career path for art streams. And the next one we was like learning how the accounting was introduced and what are the functions and what are the golden rules and what is the accounting career about. And then after we was learning from which country the accounting was being introduced and which country and what is the meaning of budgeting and what is the salary rate. As go for the chapter wise, we have learned the business structures. So main three business structures are sole trader, partnership and private limited company. So sole trader means single person who does the business by only himself. Okay, so advantages of him: he can take his own holidays, the profit belongs to him, the working hour is flexible, all the profits belongs to him, and less capital. Disadvantages of a sole trader will be harder to manage. If only one person, it's very hard to manage the business, right? So harder to manage, unlimited liabilities. For example, a sole trader, a single person is doing a sole trader business on grocery shop. So on grocery shop, when a single person is doing a business, some people are coming and asking for tips. So tomorrow I will pay for you, and day after tomorrow I will pay for you. So 2-3 persons if they ask, so unlimited liabilities. The liabilities of the person will be increased. Okay, next the cash flows and harder to sell the business. So business item he would not cost more to promote about partnership business. So when 2 to 20 people were gathering and doing a business, we call it partnership business. So inside that there will be shareholders from outside companies. Okay, what if it does a partnership business? What are the advantages and then disadvantages? So while we're doing a partnership business, the advantages will be more capital. So more capital will be into the business. So capital means goods. So more goods will be into the business. Okay, next one, shared responsibilities. So responsibilities are shared. So if we get a profit or either a loss, the okay, better decision making. So if a single person is doing a business, it's very hard to make a decision making. So if he does a partnership business, 2 to 20 people, if we get together, my point will be different, his point will be different, his point will be different. From the 2 to 20 people, 20 people got 20 ideas. So from the 20 ideas, we can develop the business. If a single person is doing a business without no idea, the business will be decreased. So in the partnership business, the business may increase only. The less percentage of decrease. So while going for the advantages of partnership, less capital will be more and the responsibility is shared and decision making. The partners will be equal to the capital. Okay, disadvantages of the partnership. Profits are shared. So in the partnership business, biggest disadvantage is profits are shared. Okay, if I am doing a single person business, the profit belongs to me. In the partnership business, with 2 to 10 people, the profit will be shared to all that 10 people. And tax issues. So tax issues between the private or private company. Sorry, government or private company. So high risk of late payments. So we got a late payment, it's high risk. Okay, you have to share the profits. The profit will be shared to each and every partner. So that is the biggest disadvantage of partnership. Okay, next one, private limited company. So while we going for private limited company, example of private limited company, Maggie's, KFC, Domino's, John Cares. So they are private limited companies. They will be overseas of the country and they are called franchising companies. Okay, they will be in different Asian companies, different Europe companies, and also worldwide. Okay, a private limited company. What is meant by private limited company and the advantages of private limited company? So if you are doing a private limited company with 50 to 100 persons, depends on the country's range. So the liabilities will be less, the debts will be less for the business. Okay, can raise money by selling shares. So if you are through the shares, you can raise more money. So in this three business, private limited company can gain more profit to the business, but profits are shared. Okay, better access to loan. So if you are applying a loan, the easiest business will be private limited company. If it has a private limited company and you have a deal with a private bank, so you can easy access to that. Next, go for the disadvantages of private limited company. More rules and paperwork. So if you're doing a private limited company, you need to prepare all the accounts one by one until 120 pages of accounts paper you need. Account system you need to make. So if you're doing a partnership business, the account system will be less. So if you're doing a sole trader business, there is only 1 or 2, 3 accounts. Okay. For doing sole trader business, just to think what is my profit and what is my income, what is my expenses. When you're doing a partnership business, you need to check profit how much, loss is how much, income is how much, expenses is how much, one person is how much shares, different person is how much, third person is how many shares, fourth person is how many shares. So when you're doing a private limited company, same goes. So you need to check one by one how many shares he has been invested, how many money he has been taken as advance, and how many money he has been invested in the business. What is the total capital? For each and 1 to 50%, you need to check different accounts. So the paperwork will be high. So less privacy. The privacy is less. The advertisement on the social media will be more on the private. The privacy of that business is very less. And profits are shared. Cannot sell shares to the public. So within the company share means you can sell the shares. Outside of a person, you cannot sell the shares. Okay, next go for the bookkeeping. Bookkeeping, the transaction that you recorded day by day, the receipts and the amount that you're spending, we call it bookkeeping. For example, each and every person should have a bookkeeping. For example, today I'm spending RM20. Okay, before I spent RM60. So one month by month you can see. Okay, just was RM400. That is one bookkeeping. Okay, on February month I have an expenses report. On the report I got RM500 expenses. So the January to February 100 ringgit had been increased. Okay, on the March one, okay, now I prepare the accounts report of mine. Now the RM600. So again 100 ringgit has been increased. So on the next month, April, expenses report I prepare for entertainment, 100 ringgit for my personal use, 200 ringgit for shoes, clothes. It has been reported, record. At the end of the month, you need to check how much is my balance on this month and my previous month. So you need to compare and check how much it is a loss, it is a income for me from the previous month. Okay, next one is asset and invest in the business that can be so asset divided by 2, non-current asset and current asset. So non-current asset items that can be used more than 12 months, current asset can be used less than 12 months. Okay, next go for the liabilities. Liabilities are the debts that you need to pay to another person. Okay, liabilities are debts that you need to pay to another person. So liabilities also can be divided by 2 parts. One is non-current liabilities and one will be current liabilities. The debt that you need to pay to another person within 12 months, so at least 12 months or more than 12 months will be non-current liabilities. The debts that you need to pay within 12 months, we call it current liabilities. Okay, next one, capital. The capital, the inventory that you are inputting to business. Okay, next one, double entry bookkeeping. So in accounting, double entry bookkeeping meaning a single transaction that should be recorded twice in an account. Okay, for example, Adam purchased the premises $400 by check. So this is a transaction. This transaction you need to record twice in an account. Okay, so there's a transaction. Adam purchased a premises costing $55,000 by check. So you need to open how many ledger accounts? For one transaction, how many ledger accounts you need to prepare? Two. So for each and every transaction, you need to prepare 2 ledger accounts. So single transaction, you need to prepare 2 ledger accounts. Okay, now Ajay purchased a premises. So premises meaning buildings. So Ajay purchased a premises costing $55,000 by check. So you need to open 2 accounts, right? So one account will be premises. So premises will be one account name. So I need to open a premises account. And one more account he has been paid through check. So check, bank money. Bank money, or you need to put out the money. Okay, now Adam purchased some premises costing $55,000 by check. Okay, what is receiving for Adam? What does Adam receive? Adam received premises. So receiving will be entered on debit side. Alright? Okay. Twice we need to enter, right? Now he has been paying through cash. Sorry, check. So now credited 55,000. So a single transaction need to be spread twice. One is on debit, one is on credit. So debit, this is debit side, and this is credit side. Okay. And the key concept we learned the debit and credit meaning. The debit meaning the left hand side, the credit side meaning general ledger is one the account short form we call it the account. Okay, and the next one we learn about represent any values that a businessman taken for his personal use. For example, I'm a businessman, so I'm running a business. From my business I'm taking 100 from the business global for my personal use. So that one term we call it drawings. Okay, businessman taken money for his personal use, that is called use drawings. Okay, for example, I came by the taxi, I need to pay for the taxi 150 ringgit. 50 ringgit I need to pay for the taxi. Okay, now in my e-wallet I don't have cash. So okay, now I'm going from a restaurant, I'm taking money and I'm going to pay. So money I took from the business. So from the business I'm taking money for my personal use. So that one we call it drawings. Okay. Okay. Next one, balancing ledger accounts. Okay. The next one we learn about sales. Sales. Okay. When an owner sells a product or goods to a customer, we call it sales. Okay. When a businessman sells product or goods to a customer, we call it sales. Okay. Purchase. Okay. For example, I'm running a business fruits business. Okay. Now he is my customer and he is my supplier. Okay, when a customer buys from me, it's called sales from myself. Okay, now I am buying from a supplier. So I'm buying some goods from my supplier, we call it purchase. Okay, so yesterday he bought from me 10 apples from my food shop, he bought me 10 apples. So that will be recorded as sales, right? So from on my accounts it will be recorded as sales. On the next day he came and said me from the 10 apples, 5 apples has been spoiled. So 5 apples has been spoiled. So now the customer is written back to me. When the customer is written back to me, we call it sales return. Okay. Now he returned the 5 apples. So now I should return my 5 apples to supplier. So when the owner returns the 5 apples to the supplier, we call it purchase returns. Okay. When the owner gets money, we call it sales. When item was received, returned back from a customer, we call it sales return. When the owner purchased goods from a supplier, we call it purchase. When the owner returned back the goods to the supplier, we call it purchase returns. Okay, there are 4 terms: sales, purchase, sales return, and purchase return. Okay. The next one, carriage inwards. So carriage inwards is the transportation cost that you are giving by cash or either check. Okay. Next one, carriage outwards. You are paying for delivery cost. Okay. Carriage inwards, you are bringing your own raw materials. Carriage outwards, you are ordering or you are placing something. Okay. Now the bank overdraft, as we learned before, the negative balancing bank. So bank overdraft always will be recorded in current account only. In the current account card only, you can purchase more than the bank. So for example, in the bank you got RM100. So from that RM100 of current account, you're going to purchase 50 for shoes and 100 for some goods. Okay, now reducing balance will be 50, right? So that 50 amount bank will be giving for you as free, not free. It will be giving for you 50 ringgit with a percentage of interest. Okay, now the banker will say, now already I given you 50 ringgit. So within 1 month or 3 months period of time, you need to pay the 50 ringgit with 2% of interest. So 50 ringgit multiplied by So shareholders will occur on private limited companies and partnership business. So when more people get together and doing a business, his shares will be different, his investment amount will be different, her investment amount will be different. So that one we call it shareholders. Okay. Now the difference between a short-term loan and a long-term loan. So a short bank will be divided, categorized into two types. Loans. Loans will be divided into two types. Short-term loans, the banker will give you that you need to pay within 12 months. With the percentage of interest, you need to pay within 12 months. A long-term loan is a loan that a banker will give you need to pay within at least 12 months or more than 12 months. Next topic was non-current assets and current assets. So non-current assets are the items that goes to the business. Non-current asset items that are usable for more than 12 months. So non-current items that are items that can be used for example, surrounding here, chairs. Chairs is a non-current asset or current asset? Chairs is non-current asset, right? So chairs, both non-current asset. Tables, non-current assets. Papers. So fixtures and fittings will be. So fixtures and fittings will be known like this. Bolts and switches, we call it fixtures and fittings. So fixtures and fittings will be non-current assets. Assets that can be used more than 12 months is non-current assets. And the current assets that can be used less than 12 months. Okay. So for example, this marker. For example, this marker is an asset. So this marker can be used for more than 12 months. Yeah, right. So this marker, you said it will be less than 12 months. So this one will be current assets. Okay. The next one, non-current liability and current liabilities. So liabilities will be categorized into two types. One is non-current liabilities and one is current liabilities. So non-current liabilities, the loan amount and the debt amount you need to pay to a bank or another person at least 12 months or more than 12 months. Okay. The long-term loan, you need to pay at least 12 months or more than 12 months, right? So same goes to non-current liabilities. Okay. Next one, current liabilities. So current liabilities, the debt amount that you need to pay to another person or a banker within 12 months. So within 12 months, you need to settle the payment. Now chapter 1 and chapter 2 is finished. In the session, got any questions, students? Yes.
At the start of the project seminar, you stated that the balance sheet would help us to identify if a certain business that we're doing is correctly recorded or not by balancing the assets and liability, right? So can you show us the format on how to do the balance sheet?
So you want the format of the balance sheet?
Yes. Sir, can you hear me now? I would like to repeat my question. At the starting of the account seminar, you stated that the balance sheet would help us to identify if the certain business that we are doing is correctly recorded or not by balancing the assets and liability. So I would like to know the balance sheet format and how do we do it?
Of course, sir.
Thank you.
In business, we do balance sheet year by year. Okay, so 2000 balance sheet, 2023, if you have a different balance sheet, 2024, different balance sheet, 2025 is a balance sheet. Okay, the balance sheet will be done by an accountant year by year, not month by month. Okay, day by day we prepare ledger accounts. Month by month we can prepare the trial balance account. Year by year we can prepare the balancing sheet. Okay, now the balance sheet. Okay, on the balance sheet, assets should be equals to capital plus liability. So on the balance sheet, asset should be equals to capital plus liability. Okay, asset can be categorized two types, right? What are the two categorized assets? Non-current assets. So this is the format of the balance sheet. So balance sheet will be prepared year by year. Okay. Now the starting will be non-current assets. So asset will be divided into two. So first one will be non-current asset and current asset. So non-current asset items are more than 12 months or less than 12 months. More than 12 months. So what are the items? Give me one example. Premises. One more.
Pictures and fitting.
Pictures. So non-current asset items, premises, pictures and fittings. Current asset items,
Cash.
cash. One more. Trade receiver. Now the format they are saying asset should be equals to capital plus liability. Okay. Now this we have got three columns. First column will be detailed column. Okay. First column we call it detailed column. Next column is analyzing column. Okay. Next column we call it balancing column. Okay. We analyze the amount here and we balance here. Okay. Now for example, the question gives premises is the 30,000. So premises is 30,000. Okay, next one fixtures and fittings. For example, fixtures and fittings $25,000. Okay. Now 30,000 plus 25,000, $55,000. $55,000 is total non-assets. Okay. Next, go for the current cash. I put 100. Okay. Next, trade receivable. So I need to receive some amounts. Trade receivable amount will be 200. So what is the total amount?
300.
So 300. So this 300 I need to put back on balancing column. Okay. Now the question is premises is $30,000. Fixtures and fittings is $25,000. So we plus this both to get the total non-current. The total non-current asset is 55,000. Okay. Now cash is 100. Trade receivable is we wrote on the balancing column it's 300. Okay, now they are saying asset total asset is equal to capital plus liabilities. So this is total assets and this is capital and liabilities. So 55,000 plus 300.
55,300.
55,300. Okay. From here, one account will be A. Okay. Okay. Now go for the capital. So one item of capital. Inventory. Okay. Inventory. Inventory. Do I need to record in analyzing column or balance sheet column? Balancing column.
Balancing column.
So for example, inventory is 50,000. Okay. Now I go for non-current liabilities. So non-current liabilities. One example of non-current liabilities.
Long-term loan.
So long-term loan I put 5,000. So inventory is 50,000. Long-term loan is 5,000. Now current liabilities. Any example for current liabilities?
Short-term loan.
Short-term loan. So this short-term loan I put 300. Okay. Now they say a total asset should be equal to capital plus. So this asset part I done. So my asset is 55,300. Okay, now inventory is 50,000, right? So this 50,000 plus 5,000.
55,000.
Good. So inventory amount plus long-term loan is 55,000. So from that 50,000 plus 300,
55,300.
so 55,300. Our total asset is equals to capital plus liabilities. So 55,300, 55,300. So if we get 55,300, 55,300 on both sides, then the account is correct.
Okay, sir, thank you. I got it.
Any other questions? Any other? Yes.
Here you mentioned on page 12 of accounting, double entry records for sales, purchase and returns.
Sales Okay, now we go for sales. Okay, now 2025, 3rd of January, sold goods for $3,500 by cash. So sold goods $3,500 by cash. So for each and every transaction we need to record twice.
Yes.
Okay, now sold goods. These sold goods defines as sales. So we need to open sales account, and one more account would be cash account. So one transaction we need to open two ledger accounts. So one would be sales and one would be cash. So now what does he receive for the business? Sold goods. Does cash debit or sales debit? Cash would be debit because cash is coming in.
Yes.
So cash would be debit. Going out is sales. Item is goods is going up.
Yes.
So 3,500, 3,500, 3,000 on sales column, 3,500 on credit side, on cash 3,500 on debit side.
Yes.
So now as the details we need to do corresponding. Okay, now cash would be applied here, sales would be applied here. On the previous question there is no date. On this question they have been given a date. So that means 2025, 3rd of January.
Yes.
Okay? Again, same. 2025. Very important is the dollar sign. Was it?
Yes.
Okay.
I understand also. Thank you.
Any other? Any other here? Question? Okay, everyone understood about the chapter 1 and chapter 2? Got it right? Got any other questions? No, right? Okay, we'll end the section right now. Hope to see you by next. Salam.